Well, good afternoon, everyone. I am Kevin Brady. I am honored to call myself Long Island Board of Realtors Government Affairs Director. Every day I get to wake up and think about advocacy, think about politics, think about policy, and think about the almost 30,000 members we have. Most of you are working part-time, but all of you are licensed. All of you have been through continuing education. All of you have focused on fair housing and have recognized in our work together that when we talk about being more involved in our community, when we talk about programs that make the American dream more accessible to everybody, it's not just a slogan. It's not just something we say from the top, from Doreen Spagnola to our CEO, across our board of directors and our executive leadership. It's always been said that this is something that we truly believe is not only the right thing to do, but good for our business. When those two things dovetail, there's not more you can ask for, except things like today, which is about not only spreading our wings locally, which we've done so much with so many of our members' engagement and support, and I appreciate that, especially the last few months during my health challenges, but to have folks on like Delphia and Michelle that I'm about to introduce, they're working at the state level. And a lot of you have noticed that we have been leaning in so much more into engaging with our national and state partners, not only through NAR and through NYSAR, but making sure that you all understand that there are human beings on the other side of those phone calls, those emails, those programs that the state or the national government might talk about that have a direct impact here at home in Queens, Nassau, and Suffolk. So the first person I want to introduce is Michelle Schimmel. Michelle is not unfamiliar to many folks from North Shore, Nassau County, but if folks aren't aware, she has been not only someone working in the housing policy space, and she will speak to that more, but in addition, is a former town clerk of North Hempstead, a former state assembly member, and someone who really has personal stake and personal stories, whether it was helping her constituents or working on things herself, about understanding that the American dream of home ownership, of the right to choose that, of the right to have access, isn't something to be taken for granted. Without further ado, Michelle, if you want to take it from here first, and Delphia, I'm going to come right to you afterwards.
Thank, thank you so much, Kevin. Thank you for those kind words. And boy, I've known Kevin for quite some time. As he mentioned, I was a local official and then a state assembly member, and that's how we really bonded. And you were a tremendous advocate. And I was so excited to hear that you were working for LIBOR. I knew that connection was going to happen. So thank you again. I am Michelle Schimmel. I'm the Director of Community Relations for New York State Homes and Community Renewal, also known as HCR. It's the state government agency of affordable housing, all things affordable housing, building, protecting, preserving affordable housing. But what people don't realize is we have this space that's called Sunny Mae, the State of New York Mortgage Agency, which is a division of HCR, which sole mission is to bring home ownership to the people of New York State. It is to make it a reality for them. And one thing that I'd like to point out is with Sunny Mae, the income eligibility range is very wide, particularly on Long Island. It really captures a very large income demographic for first-time homebuyers on Long Island. And case in point, on the personal side, when I bought my home, and by the way, I'm coming to you from Long Island today in my home. I live in Port Washington, but when I first bought my first home on Long Island 25 years ago, I was eligible for Sunny Mae. I was a two-income household, and we were eligible based on our income. You talk about affordable housing. I wanted affordable housing. But unfortunately, I didn't know about Sunny Mae, and I was in government. So we would have saved a lot of money if we went with the Sunny Mae mortgage, and I would have gotten in my first home a lot faster. So it's been really important to me when I was hired by Sunny Mae and HCR to let everybody know about Sunny Mae so they can take advantage of the wonderful financial tools and programs that Sunny Mae offers. So it's my pleasure. I have the privilege of working with Delphia Munez, who is the Downstate Business Development Director, officer. She works, particularly her niche, I would say, is Long Island, because she's coming to you from Long Island as well. And she's going to speak to the features and benefits of our mortgage programs and the other financial tools like down payment assistance loans, We have been at this for over 55 years. We are not new, but you're going to see an uptick in community outreach, and this is just part of it. So thank you, Kevin and Libor, for bringing us to you, and thank you for your interest by joining in this webinar today. Delphia, take it away.
Thank you, Michelle. Thank you, Kevin, so much. So I'm Delphia Munoz, as Kevin and Michelle both said. I'm Delphia Munoz, and I'm the Business Development Officer for Sony Mae, State of New York Mortgage Agency. I've been with the agency about 9.5 years now, but prior to that, I have to say I started in real estate myself many, many years ago, managed a real estate office in Cypress Hills, and we also had a mortgage broker's license. So at that point, putting together the packages for the loans and all the affordability became my passion. It became what I was most interested in, especially in working with the Sony Mae program. That's the reason why I'm here, almost 30 years later. So again, Sony Mae is an amazing program. It's specifically to first-time home buyers, but it gives so much more affordability and the opportunity to achieve the dream of homeownership. This is the reason why I'm with Sony Mae, and I want to be able to share all the aspects of Sony Mae with all of you. And I'm so glad for Libra's interest and partnership. So Kevin, I'd like to do the little PowerPoint if that's okay.
Sure, let me switch to the share screen. And before we even do that, as a little preamble, sometimes my most engaged members will also say, well, why don't I know so-and-so? Or do I remember so-and-so from something? Usually a mix of things in between there. And I'll say, absolutely, you remember Delphia. So Delphia was most recently at our education conference at Crest Hollow and made sure that we had a presence there. But most importantly, you've been present for us in terms of our first-time homebuyer seminars. I'm thinking of our standing room only one that we did in Baldwin was such a great example of when you reach people and they understand that you're trying to give them the resources to get that American dream for their family. It sounds like a talking point that you can beat to death, but in all honesty, when you see those moments when there's people coming in, can I get more information? And you realize the level of saying, you know what, for all the burdens on me, you're helping me achieve a dream that I've held on to for my family to build intergenerational wealth, however you want to look at it. And I know you have credibility on the ground, not just because of your prior experience, but what I've seen you do. And I just want to give that shout out to you, give you your flowers while I have you before we do this presentation. So thank you. Let's pull up your presentation.
Okay. So when borrowers are looking to buy their first home, we hope that they consider Sony Mae, right? State of New York Mortgage Agency. And one of the things that we provide is down payment assistance. Many folks come to Sony Mae because of the down payment assistance. We know that many New Yorkers, and I cover all 5 boroughs as well as Long Island, and Long Island is our best producing territory, right? That they can afford the mortgage many times because they're paying that and then some in rental, but it's very difficult to pay the kind of rents that they're paying and also come up with down payment assistance. So Sony Mae always, our down payment assistance is available always. If they want it, they get it. Our basic down payment assistance, which you'll hear a little bit more about, is 3% of the purchase price up to $15,000 that they can use for down payment or closing costs, or to pay a single premium MI and not have that private mortgage insurance monthly payment on a monthly basis. We offer below market interest rates. We also offer home renovation financing, which is amazing because unlike the 203K where they would have to pay more for it, our Remodel New York is something that they can add the cost of repairs to the home, add it to the mortgage, and pay a lot less throughout the 30 years and have that possibility, especially on that home. Most people want location, as we know, but maybe the location is not affordable for them because of the prices. However, a home that maybe is in need of repairs would be something that they can actually still afford and be within the area that they want to be in. Now, the minimum they can do as far as home renovation is $1,000, and we don't have a maximum as long as they can afford it within the mortgage. So that's a great, everybody sees HGTV. That's an amazing way to be able to take that fixer up and really be able to move forward with it. We also have a special veterans program. Our Homes for Veterans program, unlike the VA program, is for the veteran and their family or their, whoever else is on the mortgage with them. The veteran themselves don't even have to be on the mortgage. As long as they're going to live in the property and be on title, they get the same benefit. And it's an amazing program, again, and it's available for 1 to 4 families, co-ops, and condominiums as well. As I said, all of our programs are available for 1 to 4 family, co-ops, and condos. And co-ops, by the way, happen to be our best performing loans. So we're very co-op friendly.
Oh, and Dofia, our members are particular, I know, we're going to be excited both about the co-ops. Co-ops has been a hot issue for our members for some time, not just because of our advocacy on certain fair housing issues there, but on recognizing it is often, to your point, the first attainable ladder for many people in building their bridge up towards home ownership and making that feel more attainable. And we know from talking to our developer friends that in many cases, that's the best business model they have going forward. So we're probably only going to see more co-ops in the future of New York as we confront the housing crisis. And as a personal shout out to Marla Paventi, our Vice President of Government and Political Affairs at LIBOR, who's the senior member of my team. Her prior work, amongst many things that she did, including working in Congress, was working on veterans homelessness. So it really means a lot to us whenever we hear that there are special veterans programs involved. So thank you.
Wonderful. So next slide, please. So we've been around since 1970, right? Many people say, well, I never heard of Sony Mae. Again, our advocacy now is strong, thanks to Michelle and many of the folks at HCR, that we really want to have a presence and let everyone know that this is available. Again, our mission is to provide safe, affordable, and sustainable home ownership to first-time homebuyers, primarily to first-time homebuyers. And I should tell you that for us, a first-time homebuyer is someone who has not owned a primary residence in the last 3 years. Maybe someone, I myself, I did Sony Mae when I bought my first home. Many years later, it was sold, everything else. 5 years later, I decided, you know what? I want to downsize. I don't want a house, but I do want a townhouse. And so I was able to do Sony Mae for a second time because I had not owned in the last 3 years. Okay. So that's always a big thing. Everybody thinks, oh no, I can't do it again. Again, if it's been 3 years, you are considered a first-time home buyer. Also, if it's a veteran, they could have owned something as little as a month ago. As long as they're not on title on anything else, by the time they close with Sony Mae, they don't have to be a first-time home buyer. Anyone purchasing in a federally designated area doesn't have to be a first-time home buyer. Maybe they owned, again, a month ago. They just can't be on title on anything else by the time they close with us if they're purchasing in a federally designated area. And all of our programs are available through a network of participating lenders. So someone can't apply to Sony Mae directly. It has to be to one of our participating lenders. All of our participating lenders are, you can see who they are on our website, sonymay.org. But I can tell you we have somewhere around 50 to 60 lenders, anywhere from CMG, Contour Mortgage, Emigrant, M&T Mortgage. So there's a lot of mortgage bankers as well as banks as well. So definitely, find out if the person you deal with happens to do Sony Mae loans.
And Dofia, what we'll do is I'll make sure that the link to the listing for your participating lenders is available as a resource to our members for the conclusion of this webinar. So we'll set up a slide for it and make sure it's in the show notes as well.
Wonderful, thank you. So, most people say, well, why Sony Mae? Because we offer various mortgage programs, primarily targeted against the first-time home buyers. Next. So our programs are the following. We have a low interest rate program, which I always like to kid around that it was named incorrectly because it's not our lowest interest rate. The Achieving the Dream program, so those are our two main ones. Achieving the Dream program is our lowest. So for instance, today, Achieving the Dream program is 30 years fixed at 6.25%. The low interest rate is at 6 3/4. Our Homes for Veterans program, as I mentioned about it, again, it's for the veterans and their family members. We have an amazing program called Credit is Due, which I will tell you a lot more about as we go along. I told you a little bit about our Remodel New York program, which is our renovation program. In upstate communities, we have a program called Graduate to Homeownership for for graduates in the last 4 years that are purchasing in upstate communities. Next. So all of our programs have income limits and purchase price limits. So if they're purchasing, let's say Long Island, and we go according to household size or 1 or 2 person household, whatever the dynamic of that household or makeup may be. Maybe it's a single mom and a child, we consider that a 2-person household. So that the income limit under our Achieving the Dream program is $149,950. That means they can't make more than that at the time of application, at time of closing. If that same household is a 3-person household, again, it could be a couple and a child or single mom and 2 children, then the income limit goes up to $179,940 if they're purchasing on Long Island. Now, that is under the Achieving the Dream program, which, as I said, our rate today is at 6.25% for 30 years fixed. Our low interest rate program, same 1 or 2 person household, single mom and a child, income limit $187,440. And if it's a 3 or more person household, then it's $218. And I'm sorry, I can't see the rest, and I don't know by heart. So again, lots of room. You know, people think, oh, the income limits are very strict. When you see this, the income limits are very, very favorable. And so when you're looking at income limit, usually it's the borrower and their spouse. Even if the spouse is not going to be on the loan, we still count their income, right? And any other person that's taking title to the property will need to be within that income limit. They could have 4 other household members. Maybe they have adult children coming to live with them. They're not on title. They're not a spouse. We don't care if they make $1 million, right? We're not counting their income. Unlike some of the grant programs where they count every household member's income, our income is, again, based on the borrower and the borrower's spouse, even if that borrower spouse is not going to be on the mortgage, and any other person taking title. They could bring their they could bring their parents to live with them. They make Social Security, pension, whatever. They're not on the loan. We are not counting their income. And then we have purchase price limits, right? So one family, which also encompasses condos and co-ops, the purchase price limit is $1,179,990. The 2 family is $1,509,720. 3 family, $1,824,810. And 4 family is $2,267,890 would be the purchase price limit. I also want to say if they're purchasing 2 to 4 family, the income, the rental income for those other units will be used to help them qualify, but it will never be used or count against them towards the income limits, right?
That's really good to know,
important
Delphia.
to know. Yes, right, because people worry about that when it comes to income limits. We will never use those numbers for the income limits.
Especially what I think about, Delphia, is, you know, a lot of times people, because they don't know, because they've had bad experiences or just not pleasant ones working with programs, whether it was through nonprofits, whether it was through the government, like here with New York State, that, oh, maybe the prices don't adjust to the modern market. And when I see a price limit here for a 1 family at 1.1 million upwards, that heartens me, right? I have family in Levittown. Some of those houses, yes, they've been renovated, but it's amazing when you see that, unfortunately, because of low inventory, but also because of the value of people have put into their homes in a positive way, some of those houses are going for $1 million. And some people think, oh, Sonny Ma won't be able to help me with this. You're pointing out with this information that it can.
Definitely. Yes. It's, you know, the numbers. And just to let you know, these numbers usually change around July, and they usually are increased. So these numbers will be changing and a little bit better in July of this year, next month.
Oh, great. And then we'll make sure that when they update, just let me know and I'll pass them along when we share this information with our membership. And in addition, when I see the multifamily homes, multifamily home situations, and you mentioning the rent being a positive without also being a negative counted against you, I'm also thinking about a lot of the efforts that our members are putting into supporting programs that are not directly related to you, but are part of the New York State portfolio that also work with our counties, our towns, and our villages. Things like these downtown redevelopment initiatives, the DRIs, that are encouraging buildings that could be renovated, that could be multifamily, and a situation right in the middle of, say, Baldwin that we mentioned earlier, right near the train
Yeah.
station, or if someone is picking up a small
Mhm.
property in Amityville, that this policy and these programs encourage them to do that in a way that is frankly good for home ownership and good for the community. So thank you for sharing these.
You're welcome. Next, please. So what are some of the benefits? Sonny Mae programs have lower overall costs compared to other traditional first-time homebuyer programs. So for instance, an FHA. FHA is not a bad loan, but it is federal. And as we know, federal government has made many, many changes with the programs, right? And when you do an FHA mortgage, number one is you have to put 3.5% down. We only require 3%, but out of that 3%, only 1% needs to be their own, compared to, depending on the property. Also, we don't have an upfront mortgage insurance premium where FHA does, which is 1 3/4%, right? So that makes it, Sonny Mae, a less costly loan. We also have flexible credit options, right? And less restrictive guideline opportunities, especially through our Credit Institute program, which I'll tell you about in the next slide. So Credit Institute is a program that we rolled out about 2 years ago. We currently paused this program because we're making some changes to it, but it should be rolled out again within the next 30 days. It's a program for historically underserved communities, households of color, minority households. It does not have a minimum credit score. Now, I should tell you that Sonny Mae does not have a minimum credit score in any of our programs. However, with that being said, we do want to see that the borrower normally has 3 trade lines. Now, those 3 trade lines could be traditional, which is what is traditionally on their credit report, or it could be non-traditional credit, such as show us that you pay your utilities on time for the last 12 months. Show us that you pay your auto insurance, that you pay your cell phone on time for the last 12 months, right? Or rent. Now, if they have no credit at all, this program allows for that, but says, okay, but show us that you've paid your rent on time for the last 12 months, right? And the way we want to see that is either through canceled rent checks or bank statements showing the rental payment coming out, or through a management letter. Private landlord letter does not suffice, but it gives them a lot of flexibility with this, right? This program gives up to $30,000 that they can use for down payment, closing costs, or again, to pay a single premium MI or a combination of all 3, right? Because it is $30,000. Just like our regular down payment assistance program, it is completely forgiven if they live in the property for 10 years. If they sell before 10 years and they make a profit, they may owe a portion back, right? But every time that they make a mortgage payment, a certain percentage of that is forgiven. Therefore, it's never going to be the same amount that they would have to pay back. So the best example I can give is we gave someone $12,500 for down payment, and they sold within 3 years, and they made a really nice profit. They only paid back $2,500. Again, it's never meant for them to give us back the same amount. It's because every time that they make a mortgage payment, a certain percentage is forgiven. And again, statistics show us that the average first-time home buyer stays in their home for 9 years. At 9 years, there is nothing to pay back, right? So again, if it's what helped them or allowed them to be able to move forward with the dream of home ownership, then again, it's worth taking a look at, because $30,000 and all of our down payment programs, we also allow for them to layer other down payment assistance programs with ours, which gives them a lot more affordability, a lot more buying power. This program also, and this is a change that we're going to make now, which is the reason why we paused it, this program allowed that even after putting the $30,000 down payment and so on and so forth, they still didn't qualify for a mortgage, then we would start doing a reduction of the interest rate up to 2%. Where we found that people had the most need was around 1.25% or 1.5%. So that's going to be a difference that we make. But again, even if you're talking about today being a 6.25% interest rate, and someone's affordability is really at a 5.25% interest rate, that's where we're going to reduce it in order to give them that affordability and that buying power, right? It also has alternative underwriting guidelines. So again, right, the fact that they can show us that they They have no credit, but they can show us that they've paid their rent on time for the last 12 months. Also, normally every down payment needs to be sourced, right? They need to have it in the bank for a certain amount of time. This program allows for mattress money, right? And hopefully everyone has their money in a safe, secured place.
Mhm.
But sometimes, right, people can't really source where that down payment came from. So we allow a certain percentage of that to be called mattress money and be able for them to go forward and count it as being their down payment. We also allow for a family member. We do also always allow gifts from a family member, but this program also allows if a family member wants to give them a loan for that down payment, right? So it has a lot of flexibility. The reason for this program, it is considered a special purpose credit program, is that when we compared apples to apples and oranges to oranges, we couldn't understand why certain, historically underserved communities were being declined at greater numbers. And so when we looked at all the factors all being the same, many of the hurdles or the stumbling blocks were either credit or the ability for the down payment, right? Or some credit issues in the past. So this is the reason why a program like this exists.
Thanks, Sophia. And it makes a lot of sense when I think about some of the dialogue we've been able to have at Long Island Board of Realtors, certainly the last few years as well. It has been about saying, let's meet all of our communities and all of the folks in our communities where they are at, right? Let's not have folks who are discounted simply because they don't fit in the rubric, they don't fit in the stencil that was decided this is the way it is. And programs like this is what you're talking about, is saying, if the point is you have the assets, you have the ability to pay for this, as long as you have with this program to support you, then we're going to make sure you get there. It's not going to be gotcha because you didn't fill out this form right, or you can't account for everything
Right.
you're talking about. You suddenly don't get this thing that otherwise you can pay for. I come from Irish immigrant stock on my father's side, and there certainly were examples of mattress money or family pooled things that wouldn't have fit a list. And I know from my experiences with folks of all other backgrounds that's only that case repeats in so many situations. Why have those folks feel like they can't be a part of the American dream too? So thank you.
No, definitely. One of the things I always say at any of the face-to-face seminars that I do, and you always get that that light bulb going off, is that statistics show us that children who grow up in a household where it's been owned, right, home ownership, that's the mentality, is to be able to also own and build wealth, right? Instead of it, there's always that rental mentality. That's kind of where everyone gets stuck. Why not try to go for the dream of home ownership? It is available to everyone if that's something that they want to be able to achieve.
Thank you.
So some of the additional benefits of Stony May, right? With Stony May, borrowers can use, or they need less of their own money, less money out of their pocket, because again, we offer down payment assistance. Our regular down payment assistance, as I mentioned, which is available always. If they want it, they get it. They don't have to qualify separately for it, as long as they're doing a Stony May loan. It's 3% of the purchase price up to $15,000. That, once again, they can use for down payment or closing costs, or to pay that one-time a single premium MI mortgage insurance and not have to have it on a monthly basis, which again gives them better affordability and more buying power. Sometimes, right now, we exhausted our funds on this particular program, which is the DPOW Plus program. That should be opening up again sometime this year. That's a different program from the credit is due. That one is $30,000 for down payment. Sometimes we specify this program to be just for 80% of the area median income, so meaning the achieving the dream income limits. But again, we've exhausted our funds for this round. We will be opening it up again sometime this year. Next. And we come to our renovation program, right? So our Remodel New program, our Remodel New York, is the ability to finance additional repairs into the mortgage, right? Everyone thinks is like HDTV, or not just necessary repairs, but desired repairs, right? It is it allows the borrower to purchase a home in as-is condition and be able to make those improvements and finance the cost of those improvements. It is one closing. The seller and the realtor get paid before any of the work is done. They will need to have a HUD consultant to just draw up what the repairs will be or the renovation will be. The transaction is based on the after improved value or the cost plus repairs, whichever one is less. They can finance the hard and soft costs associated with the work, along with a contingency reserve. So if the property is vacant, it's a 15% contingency. If it's not vacant, then it's only 10%. The money goes into an escrow account, which Sony May administers. And, again, we pay the contractor as the work is done. And they, again, through the HUD consultant, we're able to see how the work is done and for the borrower to be satisfied with that work. They can add it to any of our mortgage programs. There is no cost or add-on for the rate or the price, which is amazing, right? Because if someone, usually if they do a 203K loan, it's much more costly. If someone waits, buys the home and then tries to get a renovation loan, it's going to be at a much higher interest rate and for a much shorter term. So again, this is an amazing program to be able to put those costs into it. I've worked many, many years with the Long Island Housing Partnership. And one of the programs that they have is the community development, I forget the name, but it's if you're buying a foreclosure or a blighted home, it gives $30,000 for down payment, right? So that can be combined with this program to then help renovate the program. And again, it's an amazing program, amazing opportunity for those folks who want to be in a particular area but can't afford the prices of a regular home in that particular location.
And those are two really important things I want to uplift from all that you were just laying out, Nafia, which is first one being, it's not as if we're saying, no, every program might have come with some limits, and you've been laying out a lot of them. But the idea that, well, if I pick this, it means I'm precluded from even thinking about other things. When, to your point, is it's like improv, it's yes, and what else can I put in that I might also qualify for? Because to your point, and to us having this conversation, different groups are in dialogue with each other and want to make sure that these pieces can all be linked together to be that ladder that brings a family up to their next level. And I think that's that reframing that mindset that used to be true years ago, which is, look, you got to pick a lane and this is your program, you're going to stick to it. All of us have tried, whether it's in the nonprofit or private sector or at the state level with the public sector, have tried to make these programs ones that can stack on top of each other. Everything may have its own limits, its own abilities, but it's the idea that we can consolidate things to help people deal with the high cost of housing. And what I was really happy to hear, which I didn't know about, and I love to admit things I don't know because it shows that I'm learning and I'm still growing at this point in my life, that I didn't know it also included perhaps financial improvements that are desirable to improve and enhance the value of the home, correct? It's not just structural requirements like the attic is falling apart or the porch wraparound that was gorgeous 100 years ago really needs to be fixed. It's also, I think of some of the folks who are so lucky to get a home for the first time, or maybe they grew up in a home that was owned by their parents and they went from renting to purchasing and they moved into the Five Towns. They moved into Hicksville, they moved into Comac. They get a small house that has a partial dormer and they want to do a full dormer. Things like that are, items that might be considered just simply, aesthetic. Is that to increase value? But those might be examples that fit into this.
Yes, no, and definitely what we get a lot of is reality, right? Outdated kitchens, outdated bathrooms, right? They really like the area. They really like the house. They really can't get past that kitchen, right? Or they can't get past the bathroom. Well, this is an amazing program to be able to do that because those things make a big, big difference. And that's what I see a lot of when it comes to this program.
Thank you so much.
You're welcome. So again, as I mentioned, our programs are designed to work well with any other available grants or assistance that may be available for first-time home buyers, right? As I mentioned, Long Island Housing Partnership, Community Development Corporation of Long Island, they have amazing programs for first-time home buyers, grant programs. And so that can be combined with our down payment assistance, and again, give someone much greater buying power. We do not have a CLTV restriction, so we don't care how many layers of down payment assistance they are putting into the transaction, right? However, if they take our down payment assistance, we must, right? So it's a 0% no interest bearing second position. But again, as long as some of these grants require something that they want to also be in second position. So in a case like that, we do what we call a parity agreement to share second position so that the borrower doesn't miss out on the opportunity to be able to take advantage of any other program or assistance that they may be, available for. Again, homebuyers need less of their own monies when they're doing a Sonny Mae mortgage, right? If it's a first-time homebuyer and they're purchasing a single family, two family, or a condo, our requirement is that they have at least 1% of their own funds into the transaction. If they're purchasing a three-family, four-family, or co-op, then our requirement is that they have at least 3% of their own funds into the transaction. And then our next chart will show you our LTV restrictions, right? So single family, right, including condos, up to $806,500 as the maximum loan amount. Then max LTV is 97%, so 3% is expected down, but only 1% of that needs to be their own monies. Two family to $806,500, still 97%, still only 1% of their own funds. From $806,501 to $850,000 as the max loan amount, then they would have to put 5% down, but again, only 1% of that needs to be theirs. The rest can be a gift, a down payment assistance program, right, any of the above. If the loan amount then goes from $850,001 to $1,032,650, then the requirement is 10% down, but only 3% needs to be their own monies into the transaction. Co-ops, the $806,500, the max LTV is 95%. They would have to put 5% down, but only 3% of that needs to be their own monies. $806,501 to $900,000, then the max loan to value is 90%, and they would have to put 3% of their own funds still. Three family, as you see, up to $850,000, 90% LTV, but only 3% of that monies has to be their own funds, again, into the transaction, either towards down payment or closing costs. From $850,001 to $1,242,250, the max LTV is 85%, but 5% then needs to be their own funds. And then you see on the four family, up to $900,000 is the max loan amount. Max LTV is 90%. They would have to put 10% down, but only 3% of that has to be theirs. And from $900,001 to $1,551,250, 85% LTV is the max, with 5% of their own funds going into the transaction. Next. Sometimes, again, Long Island Housing Partnership, just to, again, remember them, and Michelle has worked with them very closely as well. Their Employer Assistance Down Payment Program, which is an amazing program. There's about 110 companies throughout Long Island that participate in that. They don't give a list of it, but they do participate in it. Those companies give down payment assistance for their employees. Sometimes it could be up to $50,000 for a down payment, right? Those loans can only go Sonny Mae because they have layers of grants, because the employer gives a certain amount, the state matches it by a certain amount, right? So you have multiple layers. But again, those folks have a great buying power, but many of the restriction is that they can't go with other loans because they don't allow the layering of grants, but Sonny Mae does, right? So we do require homebuyer education.
Oh, I skipped on you, sorry.
It's okay. Homebuyer education, which is available online or face-to-face, however they decide to do it. Okay, there you go.
There we go. And you still knew your stuff, even when I went ahead of you on the script. So look at you.
It's okay. So most of our programs require the homebuyer education if they're using our down payment assistance, if they're participating in the Achieving the Dream program, if they have less than 5% of their own funds into the transaction, then we do require homebuyer education. But again, they can get their certificate through through an online course. I can tell you also, and I'm not selling Long Island Housing Partnership, but they are the only housing counseling agency that does not charge for the counseling homebuyer education. in case you do, your borrowers need to do that again, we don't require that it be face-to-face or one-on-one, but if that's the way that they prefer to go, then that is a good choice for them. But they can also do a home buyer education online.
Oh, it's an example too. I think everyone has their own comfort levels, how they learn. I have some members who tell me we have to have this conversation in person or I won't absorb it. Let's do it over the phone. I need an
Right.
email. The same is true for any home buyer who's starting down this road and rightfully a little intimidated, but also excited. However fits what works for them. It's good to know there's different options.
Right. As for instance, I believe it is Fannie Mae has a homebuyer education. It's I think it's called a Home Smarter Career, and that's completely free and it's online. They can take it at their leisure. And again, that counseling certificate is good to be able to satisfy the homebuyer education piece for Fannie Mae. We have on an ongoing basis, we have something called Fannie Mae University webinars. We usually do a schedule for 2 months. Some of the classes are specific for lenders, but many of the 1-hour webinars provide so much information, and they're always welcome to join those webinars as well. I can send you the schedule for you to be able to have on a monthly basis as well.
Oh yeah, that would be great. Thank you, Dorothea.
You're welcome. So this is my information. Again, I am the business development officer. I've lived on Long Island for probably over 25 years. It's my footprint, and it's my passion to be able to provide this education and this knowledge for everyone and anyone who wants to know about Fannie Mae. So please take advantage of my information. Tap in, call me. I do not mind emails and phone calls. I had a realtor today who met me at the library function last week and said, I have this one borrower who would benefit from Fannie Mae. She's stuck on this one particular lender who really can't offer her much. If tell me everything that I could tell her in order to be able to let her know that she has a lot more buying power if she does a program like Fannie Mae. I thought that was amazing. I was like, wow, she's really doing the best thing for her clients. And that is just something that makes me smile, every day. So I'm glad to know that at least the information is out there and that people have that in their arsenal, right, or their toolbox. Because Fannie Mae may not be for everyone, but at least it's something in your toolbox.
Sophia, I didn't even know you had that story in your pocket, by the way. And normally I love to do my intel and pre-producer conversations like we're setting up for Jimmy Kimmel here. I didn't even know you had that story, and that's exactly what I was hoping that you could share with us. Or I was going to say, do you have an example? But I love that because it's not only an example of, yes, I feel good, Marlo, and I made sure that you were available to our members, but it's when our members are saying, look, this is what I'm focused on. I got to get this client who's a consumer, but also a community member to help get the information that they need. That's always what makes me feel good about what I do, because it's my members taking action to do what they do every day, which is to lift up the folks they're working with to get them in a home. And when folks like yourself, when the promotion that Michelle, as a former policy maker turned policy sharer, is doing, it means a lot, and it makes our jobs a lot easier. So I thank both of you for joining us. I'm going to make sure that all of your information for contact is available. Sophia, thank you for the slides. Am I okay to share those slides, or at least take portions from? Oh, great. So I'll include them with this. The level of personal engagement, level of professionalism that you both bring to your work, I've seen it firsthand. And it's the kind of thing that I try and role model for myself, that I see certainly from Marlo and Wells in our team. And I just want to say thank you for joining us. I'll make sure your contact information is available, like I said, to our members. And most importantly, everybody stay cool out there. And the temperatures run high, not just when we're worried about housing costs and trying to keep them down, but for everything else going on around us. And our thanks to all of you who joined us today. When in doubt, reach out is always my policy with advocacy and government affairs. The same is true for any other asset. As Dorothea Munoz said better, as usual, than I could put it, which is, it's one more thing in your toolbox, one more asset for you to consider as part of your journey towards home ownership. And I think we can sign off from the three of us, correct?
Yes, thank you.
All right.
Thank you so much,
Thank you,
Kevin, for all you
realtors.
Thanks,
do.
Kevin.
Thank
Bye,
you.
Kevin.
Bye-bye.
Bye,
Bye-bye.
Kev. Thanks.